Hi there, my name is Crystal, a CPA at Life Accounting, where we help you to save on taxes and build your wealth. Today, I want to provide you with an IRS update related to the new 2022 inflation adjustment. This week, the IRS just announced updates to over 60 tax provisions, including tax brackets. Most numbers are up more now than in recent years because of the higher inflation we've been experiencing. And as we all know from what we've seen going on in the real estate market and even in the supermarket, inflation has been at an all-time high. The cost of goods and services has been consistently going up, and the IRS is aware and has made some changes to the tax laws to account for it. So if you want to learn more about how this affects you, make sure you stick around until the very end for all of the details related to the IRS tax inflation adjustments. And please be sure to like and subscribe if you don't want to miss out on more ways to save and make money. The very first thing you should be aware of is that these IRS changes affect the 2022 tax year. And for reference, we are currently in the 2021 tax year. So any updates I mention in this video are related to taxable events that occur next year in 2022 and will generally apply to the return you file in 2023. All right, getting into some updates here, probably the most notable change is related to the new tax bracket income ranges. As you can see, the IRS kept the same income tax percentages, but the income limits have changed. For example, married couples who earn more than $431,900 are taxed at a marginal rate of 35%. Whereas for tax year 2021, those same couples are taxed at 35%, starting at an income level of $418,850. So we're seeing about a 3% income increase in each tax bracket. So basically, a taxpayer can earn about 3% more in income and still be taxed in the same tax bracket. Another big change is an increase to the standard deduction. As you may know, every taxpayer can either apply the standard deduction or itemize their deductions in order to reduce their taxable income. For most people, taking the standard deduction is easier and ends up being more beneficial from a tax perspective. So the larger the standard deduction, the better. For married filing jointly couples, the deduction increased to $25,900 from $25,100. And for single taxpayers and those filing separately from their spouse, the new deduction is $12,950, which is up $400 compared to tax year 2021. And head of household filers are up to $19,400, which is a $600 increase. All right, next up, if you were a taxpayer that qualified for the Earned Income Tax Credit, you'll also experience some increases in your credit. As you may know, the EITC is a refundable credit for those who qualify. So again, the higher the credit, the better for those taxpayers. For example, if you have 3 or more qualifying children, your EITC is up to $6,935. Or if you have 1 qualifying child, your EITC is $3,733. Both of which represent about a $200 to $300 increase from 2021. The income phase-out limits have also increased, so you're able to earn a little more in income and still qualify for the credit. I'll make sure to link the details related to the maximum EITC amounts for the other categories, income thresholds, and phase-outs in the description box below. The IRS also increased 401k contribution limits to $20,500, up from $19,500. What this means is if your employer offers 401k plans as a benefit, you can contribute more to this account. And if you're familiar with how 401k plans work, you know the contributions you make to this account are tax deferred, or in other words, tax deductible. So the more you're able to contribute to your 401k account, the lower your taxable income will be, and also the lower taxes you have to pay. Another notable tax inflation adjustment for tax year 2022 is the annual gift exclusion. Now, are you someone who gives financial gifts? Well, did you know you you, as the giver, may have to pay tax on that gift you give someone? Don't worry, I'll have another video coming out shortly describing this in detail. But for purposes of this video, you should know the IRS increased the annual exclusion for gifts to $16,000, up from $15,000 in 2021. So you're basically able to gift someone $16,000 annually without having to pay tax on it. The last change I'll mention is the foreign earned income exclusion, which is up to $112,000 from $108,700 for tax year 2021. If you're someone who earns money internationally and lives abroad, you generally can qualify for the foreign earned income tax exclusion, which excludes a certain amount of your foreign earnings from taxable income. So in tax year 2022, we're seeing that the IRS is allowing these individuals to earn more money abroad without having to pay tax on it. Now, there are a lot more tax inflation adjustments, which I'll include below. With that being said, there are a few big items that will remain the same. One is the personal exemption. It will remain at zero for tax year 2022 as it was for 2021. Having a personal exemption would be beneficial as it would reduce taxable income and ultimately the taxes owed, but the IRS is keeping that at zero as it was a provision in the Tax Cuts and Jobs Act. Another item remaining the same between 2021 and 2022 is that there is still not a limit on the number of itemized deductions you can claim. Remember I mentioned that you can either take the standard deduction, which does have a capped amount, or you can itemize your deductions. Well, if your itemized deductions are greater than your standard deduction, you don't have a cap on how much you can claim. And thirdly, the modified AGI or adjusted gross income amount for filers claiming the lifetime learning credit is not being adjusted for inflation. The lifetime learning credit applies to students receiving higher education, but who do not have an AGI higher than $80,000 for single filers, which remains the same threshold for tax year 2022. Let me know if you have any questions or thoughts in the comments below, and I'll see you in the next video.